Greetings. Welcome to our e-learning module on Introduction to Reading Nonprofit Financial Statements. In this session, we will explore the key components of nonprofit financial reports, including the Statement of Financial Position, the Statement of Activities, the Statement of Cash Flows, and the Statement of Functional Expenses. You will learn how to interpret these reports, understand financial health indicators, and use financial data to make informed decisions. Financial statements are the backbone of effective nonprofit management. They build trust by providing transparency to donors and board members about how funds are utilized. They empower your leadership with critical insights for strategic decision-making by revealing revenue patterns and expense trends. And they demonstrate your commitment to compliance with regulatory and donor requirements. Ultimately, understanding these financial tools is essential for maximizing and sustaining your organization's impact in the communities you serve. Nonprofit financial reports serve dual audiences. Internal reports, including budget to actual comparisons, financial statements, cash flow projections, and management narratives, equip your board and leadership with insights for strategic decisions. External reports, like audits, Form 990s, and FEC filings demonstrate accountability to funders, regulators, and the public. Together, these reporting mechanisms ensure transparency and guide your organization towards sustainable financial health while meeting compliance requirements. Nonprofit financial statements tell the complete story of your organization's fiscal health. The Statement of Financial Position shows what you own and owe at a specific moment. The Statement of Activities reveals your performance over time through revenue and expenses. The Statement of Cash Flows tracks your liquidity, while the Statement of Functional Expenses demonstrates how you allocate resources across programs, administration, and fundraising. Together, these four statements provide a comprehensive view of your financial sustainability. The Statement of Financial Position captures your nonprofit's financial health at a specific moment. It shows your assets, both current and non-current, liabilities, short and long-term, and net assets, categorized by restriction level. When analyzing, focus on whether assets sufficiently cover liabilities and assess your restricted versus unrestricted net asset ratio. Now, let's examine each component more closely. This Statement of Financial Position highlights assets which represent everything your organization owns. Current assets, including cash, receivables, and short-term investments, provide the immediate resources you need for daily operations. Non-current assets like property, equipment, and long-term investments deliver sustained value over time, but aren't quickly convertible to cash. The balance between these two categories reveals your organization's capacity to both meet immediate needs and invest in long-term mission fulfillment. This Statement of Financial Position highlights liabilities and net assets. Liabilities include current liabilities due within a year and long-term liabilities extending beyond. Net assets show the organization's financial equity, divided into unrestricted, temporarily restricted, or permanently restricted categories. This breakdown helps stakeholders understand the nonprofit's obligations and available resources to support its mission. This sample Statement of Financial Position highlights temporarily restricted net assets and total liabilities and net assets. Temporarily restricted net assets include funds designated for specific programs or projects based on donor restrictions. These resources must be used as intended before they can be reclassified as unrestricted. The Totals section provides a complete financial snapshot summing up all assets, liabilities, and net assets to ensure the statement remains in balance. Understanding these figures is crucial for assessing the organization's financial position and long-term sustainability. The Statement of Activities captures your nonprofit's financial performance over time. It tracks revenues from contributions, grants, and program fees alongside expenses across program, administrative, and fundraising categories. When analyzing this statement, focus on revenue trends, expense alignment with your mission, and whether you're operating with a surplus or a deficit. A surplus indicates financial health and provides resources for program investment or reserves. Now, let's examine these components through practical examples. This sample statement of activities focuses on revenue. Here we can see contributions, which include individual and corporate donations, as well as grants, typically from foundations or government sources. Program fees are also shown, which represent income earned through services or activities directly related to the nonprofit's mission. Together, these revenue streams provide the financial resources necessary to support the organization's programs and operations. This statement of activities focuses on expenses. We can see how costs are broken down into program services, which are directly tied to the nonprofit's mission, as well as management in general for administrative costs and fundraising, which supports donor engagement and events. It's essential for the nonprofit to have more revenue than expenses, as this surplus helps build financial stability. Surplus revenue can be reinvested in programs, saved for future needs, or used to cover unforeseen costs, ensuring long-term sustainability and mission growth. Effective financial reports drive organizational success through 4 key principles. First, they must be tailored to meet the specific needs of your leadership team, board members, and program staff. Second, they should feature user-friendly formats that make complex data immediately understandable. Third, establish regular review cycles to ensure everyone stays aligned on your financial position. And finally, these reports should directly inform your strategic decisions, transforming financial insights into meaningful action that advances your mission. The statement of cash flows outlines the inflow and outflow of cash within an organization, giving a clear view of liquidity. Key components include cash received from donors, which shows the cash flow from contributions, and cash paid for operating expenses, reflecting payments to support day-to-day activities. When reviewing this statement, look for whether the organization is generating enough cash from operations to cover its expenses, as well as any significant changes in cash flow that might indicate potential financial risks or opportunities for growth. This sample statement of cash flows compares fiscal years ending June 30, 2020 and 2021. The statement categorizes cash activities into operating and financing sections. It includes details on changes in net assets, adjustments to reconcile net assets to cash flow, changes in operating assets and liabilities, and supplemental cash flow information regarding the forgiveness of their Paycheck Protection Program loan. The statement shows the organization's beginning and ending cash positions for both fiscal years. These distinct categories illustrate the sample organization's complete financial position, liquidity management, and overall sustainability across both fiscal years. The Statement of Functional Expenses provides a comprehensive breakdown of your nonprofit's costs by both function and natural classification. This essential financial report categorizes expenses across programs, management and general operations, and fundraising activities. This transparent allocation helps stakeholders understand how resources are distributed to fulfill the mission while meeting regulatory requirements for Tax Form 990 reporting. The detailed matrix format illustrates operational efficiency and resource stewardship. This statement of functional expenses is for the years ended June 30, 2021 and 2020. The statement categorizes expenses by both natural classification and functional areas, including program services, fundraising, and management in general. It details specific line items such as salaries and related benefits, professional services, web services, office expenses, and grants. This comprehensive breakdown illustrates how the organization allocated its resources across different operational categories during these 2 fiscal years. This slide shows Part 9 of IRS Form 990, Year 2021, the Statement of Functional Expenses section. The form displays how nonprofit organizations must report their expenses categorized across 4 columns: total expenses, program service expenses, management and general expenses, and fundraising expenses. The section includes line items for compensation of officers and employees, other salaries and wages, employee benefits, and payroll taxes. This reporting format ensures transparency in how organizations allocate resources across their functional areas as required by the IRS. Financial statements are key to monitoring financial performance and decision-making. Using the 3 T's creates a framework for maintaining transparency through comprehensive reporting. Training ensures staff can properly interpret financial data. Timeliness emphasizes distributing reliable reports to decision makers promptly. Talking highlights the necessity of regular meetings to discuss financial results, completing this effective monitoring cycle. Key ratios and metrics in financial reports help assess overall financial health. Liquidity ratios like days cash on hand and months of spending show how long we can operate on reserves. Operating ratios, including the savings indicator and fundraising efficiency, reflect sustainability and resource use. Program efficiency shows mission alignment, while debt ratios highlight long-term financial stability. This example highlights key financial metrics for a nonprofit organization. Liquidity remains strong with 67 days of cash on hand and 3.3 months of spending coverage. Operating ratios show an 8.6% savings indicator and increasing support from contributions and grants. Fundraising efficiency has improved to $7 raised per dollar spent. Spending ratios reflect a strong mission focus, with 87.6% allocated to program services and minimal administrative and fundraising costs. Key red flags for nonprofits include consistent deficits and high debt levels, which can signal financial instability and strain on resources. On the other hand, opportunities like growing unrestricted net assets and positive cash flow trends point to increased flexibility, stronger reserves, and long-term sustainability. When reviewing financial statements, it is important to compare the current year to prior years to spot changes over time. Look for trends and anomalies that may indicate areas of concern or opportunity. Always seek to understand the context behind the numbers to make informed decisions. Effective decision-making meetings balance backward and forward-looking data. Reviewing budget to actual variances and grant spending ensures accountability, while cash flow and revenue projections help plan for what is ahead. Combining both perspectives leads to more informed and strategic choices. Financial reporting isn't just about meeting compliance. It's about building trust through transparency. Clear financial explanations showcase how your mission is making an impact, attracting major gifts. Strategic communication of your financials strengthens relationships, helping to drive long-term support for your cause. Thank you all for viewing this e-learning module. Have a wonderful day.